I'm Carol Bennett. This is Verlin Love. And this is Russ Allred. And we're going to be discussing Boost the Bottom Line. Prepare your business for sale. What do you need to do to get started? And we're here to help you. So I thought maybe you could start, Russ, and
okay.
Start going down the list, and we'll chime in once in a while.
The simplest and best way of
address the, like, if they have questions to.
Okay.
Oh no, you're supposed to do that.
Yeah.
Oh, if you have questions, please type in your questions, and we'll respond as soon as we can.
On comments on Facebook Live, right?
Yeah.
So type in your questions. The best and easiest way to boost your bottom line is to clean up your facility. Make it look good. Get rid of old, abandoned, or unused capital items. You might have equipment in your place of business, if you've been around for a while and you're ready to sell, ready to retire, that have value to somebody else. I know of entire structures that people have sold and shipped them down to, in the case I'm thinking about, they took the entire building and shipped it to Mexico, where it was, well used, and they were compensated for the building. Clean up your facility and get rid of old stuff. If you've got your boat parked in the back and an extra truck or car that you use personally that's parked on your lot, sell it, get rid of it, clean up the facility, because that will put cash in your pocket, and that puts an increase in your bottom line. There's the first step, is clean up.
Okay, I like that. I just kind of want to add to that, it's really simple, and that is sometimes you want to keep certain things for showing your business, and you also want to let people know that I'm not selling that with it. So it could be a chandelier, a very simple thing, and that comes from my real estate background, but remove it if you don't want to deal with having to say, that doesn't go with this business.
Good point.
On top of that, there's a lot of items that we have in our business at some time, especially if it's a corporation, that may be used as a personal item, maybe an automobile, maybe a motorhome, maybe cash, whatever it may be. Talk to your accountant and set up a plan that you can get that out of the corporation into your personal name before you sell the business. That'll make it much easier for us and for you. And that's not going to be an item when you try to sell the business.
True. Talking about things that you might want to sell, if you have lazy inventory that just doesn't move and it's sitting there collecting dust, sell it off, sell it as scrap, but get rid of it out of your business. It'll do two things. One, it will minimize your unusable inventory that nobody really wants to buy because they don't want to pay for that. And it will, whatever cash you make from it, that will boost your bottom line. So sell inventory that is not easily sold or hard to sell. And when I say that, if you discount the price enough and tell the right people that it's for sale, somebody will buy it. But they're not going to pay full price for it for obsolete inventory. So get rid of it as best as you can and get some money for it if you can.
And that same line, if you've got a guy that is buying the business and he's looking at that inventory and saying, I don't want to deal with it. I don't want to deal with that inventory. You're going to have to liquidate it at the last minute. And it's going to be more difficult if you don't have a place of business to do that. So you're better off to get it taken care of before you sell the business.
Good.
Right. Yes, I have a facility right now, and it really needs to be cleaned up. And the best thing for this owner to do is sell some of these things off, maybe even give some of these things away, just to clean it up. It'll look much better when we show it. So absolutely, I agree.
And if you can give it to a charity, you might have an old vehicle on the property that you could donate to a charity, and that's a charitable contribution. So there's some tax benefit to that as well.
I'm sorry, Russ, I was going to interrupt you because you just told us a story a few minutes ago about a guy that had some old vehicles on his property.
Yeah, right.
Yeah, I like that story.
So I was working with a client, and he was old. He was like in his 70s, and he was trying to retire. And
70s doesn't sound like old anymore.
It's getting close. But he had some old vehicles that they used in the business. He was a contractor, and they had these old trucks, and I'm trying to remember the name of the truck, but I can't remember it. But anyway, it turned out that they had collectible value. So what he was parked out in the back and is just taking up his land was a collectible, and he sold these old vehicles for $10,000-$20,000
Nice.
that was just sitting on the back making rust. So look around and see what's there and see what you could unload, because a buyer does not want your history. He wants your income.
Right.
That's what he's paying for, or she is paying for.
Mm-hmm.
So look around and take care of that. Something else that you might want to think about, I always look, if I'm trying to raise my bottom line as quickly as possible, I'm going to look at what I have, what are my assets, and you'll see these on your balance sheet. You might have multiple accounts, cash accounts, and you have created over time, let's say an account for advertising and an account for the office in Merced, and you have a petty cash account. And each of these accounts on your balance sheet is holding $100, $5,000 maybe. They're just there, prepared for doing something that you intend to do a while ago. And what it's doing is you're tying up or holding prisoner that money. If you could consolidate these various accounts and put all of that cash into your operating capital and maybe invest in some advertising with that money that was sitting there idle, then you can help increase your bottom line simply by adjusting how you account for your various cash accounts. Another way of pulling in some money and boosting your bottom line. What else can we do to boost our bottom line?
You know, we need to do an audit of our business. And I'm not saying necessarily a financial audit, but an audit of how your business is run. Are there duplications in your business? Are there ways you can streamline or consolidate your business? A lot of times we get into habits, we get into, we've run the business for 20 years and this is the way we've always done it. It may not necessarily be the best way to do it, but if you're going to sell a business, you want to present it in the best light possible. So if you've already gone through that audit of your business and eliminated and streamlined and gotten rid of the old items that you need to get rid of, or the old programs that you need to get rid of, or old ways that you've done business, and replace them with something more up-to-date, more efficient, then that's going to make your business a lot more valuable as well.
Here's but playing off of that, to give you a practical example of what Verlin just said. Some of us have been around a while, long enough that we had a way of doing things with paper, and we produced a physical receipt or invoice, and we did it with paper. And over time, business owners are smart. There's no question about that. They started doing it automated so that they had a digital record of what they were doing in the past. Unfortunately, they kept doing the paper process as well. So they're actually doing two processes at the same time. And one of them is redundant. Get rid of the old paper processing system, get a good data storage or data collection capture program so that you're never lose the digital footprint that you're making. And yet you're eliminating a step which frees up your people, which gives them more time to make more money, and that will increase your bottom line and streamline your business, as Verlin was saying.
And that extra room you have with all the boxes in it, you can get rid of the boxes.
That's right.
Good point. I have been in businesses that they were traditionally paper businesses, like an escrow company, and they had just layers and layers of file cabinets. Now we don't need the square footage. Why are we paying for the square footage? If you're paying a lease and you could consolidate your operation by getting rid of a lot of paper, you could put more money in your bottom line, more money in your pocket, and that will make you more money for your business.
Right. And also consider your overhead costs. What are you spending on that you don't need to spend on? It's just like doing your budget. You know how much money you're going to have each month, so you don't want to overspend. And so what do I need to do to bring myself back to where, I'm within that budget and I can manage, but I can still have money left over.
Yeah.
So there are different things that you can do. You can take a look at your vendors. You can take a look at the people that are working for you. Do you have too many people? Can one person take on maybe two different jobs? It just depends on how you're set up and how you've planned ahead, and what is this year going to look like, and have you planned to increase your business? How are you going to do that? there's just a lot of different things you have to think about when you're running a business and you're considering selling. How am I going to show the bottom line, how much cash I can make?
Here's an experience that I had with a client of mine. He was a contractor, and we were talking about how he could increase his income. He was trying to sell more, and he says, you know what I really need? I need a good salesman. I need a good salesman, is what he said. And earlier on in our conversation, he told me about an employee that he had, and he said, man, she was amazing. She knew our processes backwards and forwards. She knew our pricing. She knew what we could offer. She knew all of the customers. And, I just couldn't pay her any more for the work that she was doing. She had a clerical function. And I said, I'll call him John. I said, John, why don't you give her the job as salesman? And the light went on. And he thought, exactly. And went out that very day and offered her the job of salesman. And it was an amazing turnaround, because she had all of the knowledge, she had all of the training, she had all of the contacts, and she brought in all the new business.
So probably had the personality type too.
Well, she was on the phone with everybody. She was a very integral part, but she was an assistant rather than a salesperson. And when he really thought about her function rather than her gender, it changed the world for him. And he increased his sales without increasing his income, without decreasing his income, because he put her on commission.
Wonderful.
And so it cost him nothing extra to have her sell, and when she went out and sold and saw that she could make money and he would make money, everybody's happy.
That's right.
Good deal. Yeah, putting your people in the right place can really change your bottom line. It's huge.
Let's talk about multiple locations.
You made a point just a few minutes ago about how to run your business, and a lot of times we start duplicating processes. And you talked a little bit about duplication as well. Maybe mention that a little bit.
Well, I had a business. They had 3 different locations, and they were selling one location. The problem was that they had all 3 locations combined. So separating out that one business was difficult. It can take a lot of time, and it turned out we weren't able to sell it because we couldn't get it done quick enough. And there was a little pushback as well by the seller of not wanting to do it. So turns out that was just unfortunate. So the suggestion is always to, if you've got 3 or 4 different locations in one city, put them on separate books. So they each should have their own accounts. So it would have been so much easier. So you should have that plan in place when you have a business and you're thinking, okay, I am going to sell. Okay, when I sell, I need to make sure that I do this properly. And so that's where an accountant can come in and let you know how to do that. But you've dealt with that. You've dealt with that.
I had a situation with just very similar, where a couple had 2 businesses, and they had combined the businesses on their financial sheets. And it took us almost 10 months to get those separated, because they were only selling half of the business, or the one part of the business. So maybe some conversations with your accountant on how you can do that, and how you can keep separate books on the different businesses, so that if you ever do decide to sell, and you never know what's going to happen. It may be that you have a family and you have some kids that want one part of the business but not the other, so now you want to sell the one part of the business, but you've got it combined as one business. And it makes it very difficult for us to present that to our buyers.
And that's 6 months for them. That's a long time. It takes us 10, and it takes us sometimes a year to sell a business.
Yes.
But you still sold it.
We still sold it.
I have a business for sale right now where the owner has followed through with his exit planning process, and he had 3 locations in town, and he recognized that one location just wasn't very profitable. It still paid for itself, he thought, but it wasn't profitable. And so he made the very difficult decision to just shut it down. He closed the doors, and the lease ran off, and he closed the doors. And we noticed and watched and tracked the income for the next 2 years. And his gross sales went down because he didn't have the sales from that location, but his net income went up because he wasn't allocating resources to that very, it wasn't unprofitable, but it wasn't a profitable store. And because he wasn't allocating other resources, he was able to make more money at the remaining stores that he had. Mm-hmm. So if you're looking at your various locations and you're thinking about selling your business, make sure that all of your locations are profitable. They stand alone and they make money independently. And then you can make, or a buyer can make a better decision about buying. So it's something to consider.
I need to consolidate.
Yep.
Mm-hmm. Now you just mentioned leases.
Right, I was thinking leases too. Mm-hmm.
Yeah.
Yes.
Yeah.
So did you have something to say about leases?
Well, I think we all have something to say about
Yes. If especially for a legacy business, a business has been around for several years, several decades perhaps, you might look at your lease and there was an automatic, we call it an escalation in your lease. So every year your lease went up a little bit. And if you've been there a long time, that lease might be quite high. As I see my peers, as we get older, and we're less likely to extend the lease because we don't know if we're going to be around to pay for it. But as business brokers, what we want you to consider is you might be able to renegotiate the lease, because right now maybe you're on a month to month, you got a good old friend that's you're paying rent to, you're on a month to month. If you were to say, listen, I will commit to another 5 years on my lease if you'll drop the rate down and renegotiate the lease. Mm-hmm. And that gives the landlord a consistent cash flow for the next 5 years, and it puts more money in your account, your pocket, because you're paying less in leases. So it might be a good time to renegotiate a lease. Mm-hmm. And if you can, you don't want to accept a personal guarantee on that renegotiated lease, because you don't want to be guaranteeing the buyer of your business that they're going to continue paying their rent there. If you could attach it to the business itself as a corporation, that would be even better. But extending the lease and reducing your lease costs is one way of increasing your bottom line. With that in mind, any vendor that you have that you pay on a regular basis, like insurance or maintenance, you go out and get a bid or a couple bids and see if you can do better, and see if you could get the same service for less money, and that will also increase your bottom line.
Mm-hmm.
Right.
And then when you go to sell or to sell your business, if your lease is not properly written and you don't have the proper terminology in it, it can hurt you in selling the business.
Yep.
Because a lot of times what will happen is that you're not able to transfer the lease. You don't have a long enough lease for the buyer to be able to use it. There's escalations in the lease that will inhibit the buyer. There's all sorts of things and if you need help with that, of course we can help with that. But those are things you need to think about. And the month to month are not going to work for an SBA lender or somebody that's going to want to finance a business.
Exactly. Mm-hmm. If you're going to finance with an SBA loan, your lease has to be longer than the term of the loan. So you have to be able to say that we're going to be here longer than the payoff of the loan. Probably the biggest thing that you could do to increase your bottom line in preparation for sale is make sure that every dime that comes in across your cash register counter that goes into your financial statement. Mm-hmm. We have so many business owners that think they're so wise and smart by pocketing all of their cash, and they don't account for the cash that comes into their business, which it makes sense. They save let's say 30% of the income in taxes for the time that they're in business. But especially in the last year of your business, let's say your business, we use rules of thumb. And one of the rules of thumb for some businesses, 3 times the net income. So that's what the value of the businesses would be, 3 times net income. So by pocketing the cash, you're saving 30%. But by reporting the cash, you are increasing the sale price of your business by 300%. So especially in the latter years of your business, you need to show all of the money that comes into the business, Now, your accountant can help you minimize the cost of that. I'll give you a good case in point. Let's say that you have a personal truck and you use it for your business and you pick up things all the time. It's a truck. And it really is your business truck that you happen to use personally. And it is a beautiful, shiny red color, and you love this truck. It's really your truck. But if you set it up as your business truck and depreciate the cost of the truck on your financial statement, you can shelter the cash that you're taking in, because you would have used that cash to buy that truck anyway. In this way, you actually get a benefit, a tax benefit, by establishing the truck as a business asset and depreciating it. And I'm not an accountant, none of us are accountants, but you can verify with your accountant how to best do that. But it's one way of sheltering the money that comes in cash that you've been hiding. So something to
Show
consider.
the cash.
Show the income. Well, all the income, show every dime in income. If you come to us to sell your business, we want to get you the highest and best price, and that's what we're trying to do is teach you how to get the highest and best price for your business.
And we
your
just
accountants-
can't sell cash, right?
Yeah, your
can't
accountants
sell
will help you shield some of your
Yes, they
assets
will.
and
Sure.
income. But if you're hiding it,
Right.
just consider that you're taking the profits of your sale now, and when you're going to sell the business, you're not going to get as much out of it because you're not going to be able to show that it's worth what it's really worth.
That's
Exactly.
right. And we have to show proof. We look at your tax returns.
I think we've probably discussed 20 ways that you can increase your
Yes.
bottom line without a lot of new effort. And I hope that you'll give us a call, and
Please.
we'll try and help you specifically with your business. Decades of experience sitting right here that could help you and make you more money for the business that you want to sell.
Absolutely.
Thank you
And
for
thank you for
joining
your
us.
time.
Yes, thank you.